Is your finances your prime focus this year? Are you looking forward to investing your hard-earned money but too scared to get started? Then this video is for you. Hello viewers, welcome back to yet another video on our channel. Today we will share with you Warren Buffett's top investments, strategies, and advice. So stay tuned and let's dive right into it. Warren Buffett is arguably the greatest investor of all time, and his investment advice is timeless. And after much deliberation, we settled on our 6 favorite Warren Buffett investing tips for you to follow this year. Number 6. Only listen to those you know and trust. Once management shows itself insensitive to the interest of others, shareholders will suffer a long time from the price-value ratio afforded their stock relative to other stocks, no matter what assurances management gives that the value-diluting action taken was a one-of-a-kind event. Warren Buffett. Throughout his shareholder letters and interviews, Warren Buffett emphasizes the importance of investing in trustworthy, competent management teams. Simply put, Warren Buffett is very careful when it comes to selecting his business partners and managers. Their actions can make or break an investment for many years to come. Warren Buffett is obviously far more connected than any of us, which helps him learn who the best and most honest management teams are in an industry. While we lack the resources to really evaluate the character and skill of a public company's CEO for investing purposes, we can control who we listen to when it comes to selecting our investment and managing our portfolios. Number 5. Low-cost index funds are sensible for most investors. Did you know that most investors fail to beat the market, and often by a wide margin? We hurt our performance in many different ways, including trying to time the market, taking excessive risks, trading on emotions, and venturing outside our circle of competence. Once Buffett passes away and his Berkshire Hathaway shares are given to charity, Buffett's trustee has clear instructions to follow. My advice to the trustee couldn't be more simple. Put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. I suggest Vanguard's. I believe the trust's long-term results from this policy will be superior to those attained by most investors, whether pension funds, institutions, or individuals who employ high-fee managers. Warren Buffett. Low-cost indexing can be a great strategy for many investors to consider. Most professional stock pickers fail to generate returns that justify their higher fees. Before we move on, if you're enjoying this video, make sure to give it a big thumbs up and subscribe to our channel. Also, don't forget to hit the notification bell to stay updated. Now let's get back to our video. Number 4. Investing isn't rocket science, but there's no easy button. One of the greatest misconceptions about investing is that only sophisticated people can successfully pick stocks. Yet, raw intelligence is one of the least predictive factors of investment success. You don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. Warren Buffett. Equally important, investors must remain aware that there's no magical set of rules, a formula, or an easy button that can generate market-beating results. It doesn't exist and never will. Investors should be skeptical of history-based models, constructed by a nerdy-sounding priesthood. These models tend to look impressive. Too often, though, investors forget to examine the assumptions behind the models. Beware of geeks bearing formulas. Warren Buffett. Anyone proclaiming to possess such a system for the sake of drumming up business is either very naive or no better than a snake oil salesman in our book. Number 3. Diversification can be dangerous. In our view, individual investors gain most of the benefits of diversification when they own between 20 and 60 stocks across a number of different industries. Warren Buffett is the exact opposite. Back in 1960, Buffett's largest position was a whopping 35% of his entire portfolio. And today, Apple accounts for around 40% of Berkshire Hathaway's equity portfolio, though the conglomerate owns a number of large operating businesses as well. Diversification is protection against ignorance. It makes very little sense for those who know what they're doing. Warren Buffett. How many stocks do you own? If the answer is more than 60, you might consider slimming down your portfolio to focus on your highest quality holdings. Number 2. When you buy a stock, plan to hold it forever. Once a high-quality business has been purchased at a reasonable price, how long should it be held? If you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. Warren Buffett. Warren Buffett clearly embraces a buy-and-hold mentality. He has held some of his positions for decades. Why? For one thing, it's hard to find excellent businesses that continue to have a bright long-term future. Furthermore, quality businesses earn high returns and increase in value over time. Number 1. Invest in what you know and nothing more. Never invest in a business you cannot understand. Warren Buffett. One of the easiest ways to make an avoidable mistake is getting involved in investments that are overly complex. Many of us have spent our entire careers working in no more than a handful of different industries. We probably have a strong grasp on how these particular markets work and who the best companies are in the space. However, the far majority of publicly traded companies participate in industries we have little to no direct experience in. This doesn't mean we can't invest capital in these areas of the market, but we should approach them with caution. By embracing these Warren Buffett's investment advice, you can better manage your portfolios to reduce the number of errors you make and move closer to achieving your goals.